For the deep dive this Monday morning, gosh, I'm messed up here, October 31st. It's Halloween. So welcome to the deep dive. Excited to get our week started this way. Excited to get everybody on that starts their week this way. You know, we always have people all across the country that join us for the deep dive. So excited about that. We're going to talk about a lot of things. You know, over the last couple of weeks, I've had a chance to be out and speak with a lot of groups and talk about what's happening in the market and hear things that are important to you. We're going to talk about where we're at right now, something that happened the end of last week that hasn't happened in 20 years in our business. And then we're going to talk about what experts are saying about next year. You know, I said that in the video that we released this morning just about the deep dive. Projections and things that are happening in our business are changing very, very rapidly right now. And so I want to give you those updates so that you can be the most informed agent on these topics in your market. And so that's really my goal. I'm gonna follow along here with all of us online. So let me know where you're watching from this morning so that we can call you out there, and so grateful for everybody that joins the deep dive as we get started each week. So join us, get in here. We're going to give it just a minute to let people join and be a part of this deep dive as we get going so that we can start the week off this way, have all the information we need to be educated on these topics. All right, I'm going to try to pull this up and see us here. Sean, see you there in San Antonio. Great to have you. Louisa in Dallas, Karen in Charleston, Michelle from Wisconsin, Jeff in Boston. So many folks. Michelle in Virginia Beach, right down the road from us here in Richmond, Virginia. Great to have you on. So many folks. Monica in Arizona, Indianapolis checking in, Korea, Cameron in the Woodlands. So many people joining the deep dive. We're grateful for your support of this. And again, like I just mentioned, we're going to talk about where we're at right now. We're going to talk about where, you know, forecasts are heading into next year and kind of break that down. As always, if you have a question, drop it in the chat. Jess is on with me this morning. She'll be watching those, answering any of those that can be quickly answered. Otherwise, we'll take those at the end of the deep dive this morning and get that started. So let me pull my slides up here. I'm gonna hop into a few of those. You know, if you're a KCM member, you can go in and download these slides, use them for videos, use them for blog posts, use them just as you're out talking with people. You know, a good idea right now is maybe to print some of these slides and just have them with you, or have them on your phone or iPad so that you can quickly talk to this fast-moving market as questions come up, like what's happening with interest rates, what's going to happen with home prices and home sales, and should I buy a home right now? All the questions that people are asking themselves in this market. But I'm going to go ahead and share this graph right here. You know, I've shared it many, many times. We start off this way in the deep dive. You know, this definition of reality, I'm going to call it, in interest rates. You know, you see the title here: mortgage rates surpass 7%. That happened Thursday morning. The weekly monitor from Freddie Mac comes out every week. That's the average interest rate in this country. We know, you know, the story certainly this year is they've shot up from right at 3% at the beginning of the year, now up over 7%. You know, I mentioned before, this has not happened in 20 years. March of 2002 was the last time we saw an average interest rate over 7%. So if you've gotten in the business in the last 20 years, you haven't seen an interest rate like this. And, you know, my argument would be the issue in real estate, you know, of this, you know, impact of interest rates isn't 7%. It's been the rapid rise to 7% by far. But let me give you a couple of just very interesting perspectives about where we sit in this interest rate environment with this rapid rise this year. First, Lynn Kiefer said this: U.S. 30-year fixed mortgage rates have increased 3.83 percentage points since the end of last year. That's the biggest year-to-date increase in rates in over 50 years. So this rapid rise in rates, biggest increase in 50 years. You know, literally forecasters are seeing something right now they haven't seen in this rapid rise in interest rates to continue on this. Another interesting statistic: just 1 year ago, rates were under 3%. This means that while mortgage rates are not as high as they were in the 80s, they have more than doubled in the past year. Mortgage rates have never doubled in a year before. So as you think about forecasters, you think about people that are trying to project where the business is heading. They haven't seen this in the last 50 years. I'm going to call it, they haven't seen this while they've been projecting. And second, we've never seen a year where interest rates have doubled. So we're in this territory of, sort of uncharted forecasting, and, really folks looking, saying, okay, what's going to happen now? A lot of people projecting, the negative element of that. And is it going to crash? What's going to happen? And really this question of what's ahead, I think, is on all of our minds in the business, but certainly in the minds of consumers. Our job right now is to be able to bring our expert opinion, bring these forecasts to the folks that we serve so that we can give them certainty, help them make wise decisions through this market. So let's spend a few minutes and talk about what's ahead. I think these forecasts are going to be evolving as they are. We're going to bring those to you. And I would encourage you, as you put content out there, as you talk to your clients about this, that you do the same. You say, look, I'm going to stay on top of this. I subscribe to a service. They don't have to call out Keeping Current Matters, but I stay on top of this so that I can give you the best advice. So a couple things that are pretty clear right now. I'll start here with a survey from the Wall Street Journal. Is a recession around the corner? Each month this has been done, this survey has been done by the Wall Street Journal. It's gotten higher. As of October, 63% of experts, economists, CEOs say we will be in a recession in the next 12 months. Now, if you followed Keeping Current Matters, you're well prepared for that conversation. What does a recession mean to the housing market? Typically, if you go back in history, we can say what it means for interest rates. We can say what it's meant for prices, and you can give your relevant market opinion. But no doubt that fever pitch of folks calling for a recession in this country continues to climb. So that's the first point there. Second, what's the other point is that relates to the recession relative to the consumer? Well, this is a CNBC article that says, 3/4 of adults are making lifestyle changes to prepare for a potential recession, which makes sense, right? If we see something on the horizon, we're going to say, I'm going to do things differently. 1 out of 3, 34% are delaying major purchases like a home or a car. Okay, we need to be aware of that. Recession, experts saying, hey, a recession's coming in this country. Consumers saying, you know what, I'm going to do some things differently given that. And certainly that's happening across the country, or we're seeing the signs of that in these surveys. Okay. The other big question that I mentioned before, what's happening with pricing? What's happening with home sales? What does that look like? We've got some of our first looks at that I want to bring you this morning. Mark Fleming said this, and I think it's a very, very good point that sums up this market. House price appreciation has slowed in all 50 markets we track, but the deceleration is generally more dramatic in areas that experience the strongest peak appreciation rate. So the markets that went up the fastest are going to see the biggest change going through the next year. Many calling for depreciation, some calling for appreciation. I'm going to give you those updates here in just a minute. But no doubt what's happening in one market may not be happening in the next. What may be happening in a hotter market, let's say maybe a West Coast market as compared to something that might be in the middle of the country or in another place that wasn't as hot, going to see different things happening. If we start to look at the national picture, this is where it gets interesting because we have those calling for appreciation, those that are calling for depreciation. This is the latest look at home price forecast for 2023. All of these have been updated in the last 30 days. We've added back in Fannie and Freddie. We'd taken that out because they hadn't updated theirs, but you see Ivy Zelman, Fannie and Freddie calling for depreciation. Fannie and Freddie marginal depreciation, Ivy Zelman 5%. But then you have on the other hand, the home price expectation survey, NAR and MBA calling for appreciation, small amount of appreciation. As I look at surveys right now of what experts are saying about forecast, you're seeing sort of this look of maybe a little bit of appreciation, maybe a little bit of depreciation. And we've talked about that on the deep dive. We've said, whether it's a little bit of a depreciation or a little bit of appreciation, what matters in this market is mindset. So keep that in mind as you start to look at these forecasts. Where do you see your market heading? How are you giving your relevant market opinion based upon facts? What are the factors that are weighing in that allow you to give that advice, give you the best advice possible right now. If we take a look at home sales, they're projected here to drop in 2022, latest from Freddie Mac, 5.8 million total home sales in this country, very much in line with 2018, 2019. If you see that 5.97, 5.98 in 2018 and 2019. And then 2023 projected to fall even a little bit further, 5.1 total home sales. If you look at that's just from Freddie Mac on their projections. If you look at home sales going into next year from Fannie and Freddie to MBA and NAR, you see this range of, I'm going to call it 5 million, 5.4 million across the board homes sold in this country. So no doubt, less than what we've seen in the prior couple of years, less than this year. And that gives you perspective of nationally what's happening relative to that. I think it's all going to be about recession. It's all going to be about the consumer, how they feel. It's all going to be about interest rates and following that story relative to real estate. I want to end with this quote here, and I'll turn it over to Jess in just a minute for questions. Odetta Cushy said this. That was a great perspective. If you can find a house that meets your financial expectations for a monthly payment, and it is a good time for you to buy, then do it. And if you wait for prices to fall, but they never do, you may discover the hard way that the house that you found a year ago that you really loved, that you could afford, but you passed up on is more expensive next year. The question that everybody wants to ask right now is, should I buy a home? And our job is to give the best perspective we can on that relative to interest rates, relative to prices, relative to what it means to own a home and the benefits of that. We've equipped all of our KCM members with the financial and non-financial benefits of home ownership. And I think that is the message that we need to be delivering out in the market. One of the questions that I like to kind of pose here is, what is your story out in the market right now? Because some don't have a story, but some may have a story, but it's maybe not correct. But we can bring a relevant market opinion to those that we serve and give them clarity. And to that end, I think one of the biggest jobs that we have is to bring clarity in this market. And we're going to do a webinar on this, how to bring clarity to the biggest questions in the housing market. Kate Rezenbeck and Jack Goodall from our team will be conducting that webinar next week. You're going to get more information about that, more of that. There may even be information in the comments. Jess, you can let me know if we have that for people, but be on the lookout for that. Go to trykcm.com/webinar, reserve your place for that, because you're going to want to attend that to get the latest information on prices, on interest rates, on everything that we want to be talking about to bring clarity in this market. So I'm going to pause for a second, Jess, bring you up. Any questions that are out there that have come up today?
Hey, Dave, I did see just one question come through from Jeff. Jeff asked, is the best way to acquire local market data to reach out to our state board of realtors?
I think that's certainly one way, Jeff. You can reach out to your local board. You can certainly pull it through the MLS as well. I think inventory, staying on top of that right now is critically important. Looking at prices is critically important in your local market, but between your MLS, between your local board, I think those are some of the best ways to grab that information. And even you can take what we do at KCM and mirror that and say, okay, here's what is happening nationally relative to home sales. Here's what's being forecasted in our local area. But great question there.
Awesome. Thank you for that, Dave. And I did just see one more come through from Matt, who asked, any projections on interest rates going up or down next year?
Yeah, Matt, there are projections right now. I didn't include those, but here's what I would generally say what experts are saying, because I don't think the projections give us a clear enough look of what to expect. Here's what I hear. In the short term, interest rates will continue to rise. And why is that? Because this is all about a battle against inflation. So depending on what you believe about inflation, you can bring your relevant market opinion to that. But we'll get some good information this week from reports that are coming back, but that'll be all about inflation. So if we go a little bit higher here in the short term, I think that would be what I hear experts saying. And then what most folks are looking for is, when is inflation starting to get a sign that it's under control? Maybe not taken care of, but we're not getting bad news relative to inflation out there. And then, if you follow the storyline of what we just said, experts are saying we go into a recession. Well, we know what happens in a recession to interest rates. They start to drop. But, based on the technical signs right now, and I won't go deep into that, I believe as soon as we start to get the first bit of good news about interest rates, we're going to see some relief in 30-year fixed mortgage. So more to come on that. But I think those projections right now would say, hey, they're going to go up a little bit and then they're going to come down. And I don't think the way they project interest rates by quarter, that visual look at it gives us that way to be able to give great advice right now.
Awesome. Thank you, Dave. Nope, that was the only questions I've seen come through.
All right, good. Well, as always, I'm grateful for everybody that joins the deep dive to get your week started, where we talk about the biggest issues in real estate so that you can be the most prepared agent on these topics. Make plans to attend this webinar. Go download these slides. You can go in the KCM member area, grab these slides, get them out there, and start giving great advice relative to this market, because it's going to be changing. We're going to bring these updates to you every week on the deep dive and everything we do at Keeping Current Matters. So enjoy this week, and we'll see you back next week. Take care.